How serious is competition growing? How much are you feeling the pressure?
No, but of course, as we have said for some time, it's a very competitive industry, and of course we've seen ASP's, average selling price per megawatt, came down rapidly, especially in 17. So it is a competitive market for sure. The good news is that now we have seen a stable ASP for the last 5 quarters, and of course we are a project business, so we have some lead time from orders that we take into execution and revenue. So definitely what we see in the P&L of last year and also into this year is a hardening of a competitive pressure, primarily coming from the price drop we saw in 17. But on the other hand, then the good news is that, as I said, for the last 5 quarters, we've seen a stable ASP level from Vestas.
So that's the selling prices. Let me ask you, Anders, good morning, about costs. How difficult is it to keep costs under control with tariffs on steel, for example? Is that having an impact on the raw materials that you need to make your wind systems?
Yeah, so I mean, the way to look at that, and the way to look at, in generally speaking, to come back to the situation we had prior to 17 is, of course, we have 2 big levers. It's cost out, as you say, and the other is new technology. And so basically new turbines that produces more to a lower cost. And that's, of course, what we have done throughout the years, and we continue to do and continue to invest in new technology. We launched a new turbine program just a couple of weeks ago. So that's probably the biggest lever of the 2. The cost side, we, of course, divide into 2 buckets. What we can do internally, so to speak, on making the turbines more cost efficient. And then we have to mitigate the tariff situation. And that is, of course, a challenge. We estimated last year that tariff could impact our total production cost, global production cost, then with about 1.5%. We have been mitigated, very roughly speaking, about a third of that. And the other cost increase that we see from the tariff situation is, of course, then what we have included in our outlook for this year.
We have, the German government talking about withdrawing from coal plants by the time, Anders, you and I are already dead. It's like not until 2038 or something. Where are the markets really progressing quickly? I mean, where are governments doing more to move towards alternative energy?
I would say very broad-based. I mean, looking at Europe overall, I would say very much the drive to the 20% target, of course, 2020, and then the 32% target for 2030, which I think provides a good overall framework for Europe. Then you're right. I mean, we see markets going a bit up and down. I think the good news from Germany is, of course, that they actually have increased the auction volumes from a fairly drastic reduction that we've seen in the German market already. And, of course, we've seen also on the order. But they then increased the auction volumes. Now, the next challenge is, of course, the permitting situation. But overall, I would say if I look at all 3 regions and order intake last year, we grew 25% in Americas, we grew 25% on order intake in EMEA, and we grew 38% on order intake in Asia Pacific. So there is definitely a very good, solid growth from a volume point of view in the market. And that's based on policies, but probably even more important, it's based on the increased competitiveness of wind. And we see that, of course, in technology-neutral auctions, that wind takes a large share of those auctions.
And Anders, how much does that rely on government subsidies, though? We're seeing lower government subsidies, of course, for the sector in certain geographies, in particular in the United States. How confident are you that US demand will continue to hold up in the face of that declining support?
No, I would say generally speaking, we have already moved from a subsidized feed-in tariff system to a market-based auction system, and technology-neutral auctions. There are no subsidies. I mean, we are on global average on levelized cost of energy around $50-55 per megawatt, and there are very few other technologies that can beat that. So in the U.S. specifically, I would say that the phase-out of the PTC tax credit support is a solid policy. It's a common way in the U.S. to introduce new technology to use tax credit. Actually, gas had the same some time ago. And if I look at just last year, we took 170 megawatt of orders of what's called a 60% PTC that actually then can be deployed to 2022. So I think that the phase-out is a fair phase-out, and that phase-out is something we can compensate with technology.
All right, Anders, thanks so much for your time this morning. Anders Runevad there, CEO of Vestas Wind Systems.